the mastering the first time mastering financial aid for first time college parents. Okay, let's roll, shall we? Now, when we give these presentations, I've been doing this for many years, and one thing I used to, when people were in front of me at live seminars and webinar rather than webinars, you could see people sort of squirming in their seats after a while. And so I've come to realize the mind can only absorb what the backside can endure. So I am going to sort of jump through this, um, you know, pretty quickly. Like the host said, this is going to be this is going to be recorded, so you can always go back. But if you have any, if you need me to answer any questions, type them in your chat, and we're going to get to them at the end. Okay. Now, perhaps some of you have high school seniors right now filling out college applications. Perhaps they're writing their essays or getting somebody to help them with those essays. Maybe they're prepping for the SAT or the ACT. Whatever they're doing, it's probably, if you're like most parents, it's not happening fast enough, they're not communicating enough with you, and it can be a kind of a frustrating time for both them and yourselves. So one of the things I like to do is sort of project in the future and start with the end in mind, because going through high school, middle school, I mean, it's all very emotional and well, it can be tough. So going to college is also an extraordinary event, and I like to start with, to put things in perspective, what I call the end in mind. And I've had 3 children go through college, and the most recent one was, gosh, it seems like, I think it's 10 years now. And I go back to this often because it really sort of personifies the experience that most parents go through when they see their child graduate. So I remember and it's always an overcast day, typically in the Northeast, right in May. And I was in Boston, and we were getting ready to go in. It was kind of muggy, and we go into the auditorium, and you could immediately sense the anticipation about what was going to happen. And it's a lot of hubbub, and people are just really kind of anxious. And the students then come in and they find their sections, because they usually they're by major, and they find their seats, and everybody up on the stage is giving their speeches, and that goes on, and you're like biting your nails. Come on, get through. I want to see my kid graduate, get her diploma. And lo and behold, that you get through all of that, and your student's name is called, and I'm thinking about my daughter in this particular instance, and she walks across the stage and meets the president, gets handed her diploma, and this, I call it the $3,000 smile, orthodontia. And she gives this big smile, and she's looking at her friends, and waving, and then she sort of looks for us, her mom and I, and she finds us, and she just says, "Thanks, Mom. Thanks, Dad. I love you." And that really kind of, I don't know, personifies the whole thing. It really culminates the whole experience after all that your child is happy, you're happy, and everybody's got their endorphins going, and their dopamine and their serotonin, and everything's happening, and it's just a one big love fest. It's fantastic. So there we are, and I think this is all what we really want. So let's kick it off. There are some rules to the financial aid game. I think of it as a game anymore, because they change so often, and there's knowing the rules means you can bend them, and I like what the Dalai Lama has to say about that. And one of the things, when you have games, you need to know those rules. And because college is kind of a high stakes game, you have to really know enough to be able to do it right, because the first year, the freshman year you're playing for, is you're really only your only shot. It's very difficult to get more money as years pass to sophomore and junior, senior year. College costs keep going up, even if whatever age you have tends not to keep up with that. So you really want to do it right the first time. And I see a lot of parents who just don't do that. And we've been doing this for 26 years this month, with College Tuition Solutions when we started, and now it's Financial Aid Now. But we've been helping families save on the cost of college rather than save for college, because there's people that do that that'll help you save. But at this point, the ship has sailed. If your student's a senior, you're not going to be able to save much longer. You're thinking about how you're going to stretch those dollars as much as possible. So there's a few things you're going to want to need to know the answers to. And there are three basic strategies. The plus one is something I'll touch on at the end, but there's three basic things. And you can't know everything in this time we have together. It's just too short. And I don't expect you to, and you shouldn't expect yourselves to learn everything. What you need to know is what you need to do for your student, your family. Just enough for your family, not everybody else. So here's our agenda. We're going to learn the basic language of financial aid, how we talk financial aid and how it works. Try and be real basic about it, but still understandable and give you enough information to really do something with it. And then ways to which you can save on the cost of college, which ultimately we want to stretch our dollars as much as possible, especially with all this inflation going on right now. So some key terms, if you already know these, forgive me, but you can probably use a refresher course to know exactly what we're talking about here. One thing you probably have heard of, though, is expected family contribution, or EFC. And this just is a number that the government comes up with when you fill out the FAFSA that combines parent income and assets and their students' income and assets and number of children in college at the same time, some other things as well, and that gives you this number. And rarely have I ever heard a parent say, oh, that's right, that sounds good. It's more like, how does the government expect me to pay for that? How does the college expect me to come up with that? Then we have cost of attendance, or COA. This includes tuition and fees. Obviously, you're probably thinking, well, I know that. Room and board, well, you know that. And those are all billed by the college. You will get a bill for that per semester. But what a lot of colleges do not tell you is their indirect costs. And those are the personal expenses, travel, books and supplies, that sort of thing. And those numbers can vary quite a bit. Then there's the term financial need. And that simply means when you take the cost and you subtract your EFC, is there money left over that needs to be filled by any aid? And that's your financial need. And if there's a difference between, they don't fill all of your need, then that's called a gap, and you add that to your EFC. Now, scholarships, everybody knows about those. They're generally given out for merit or athletic ability or special talent that a student might have. But not all scholarships are actually scholarships. They can be grants, and I have a slide where I'll show you an example of that. And then there are federal and state grants based on EFC and financial need. So to get a federal, like a Pell Grant, you have to be fairly low income. To get a state grant, 70, 80,000, I think, is around where the break point is for that. Anything above that, you're out of that part of the aid game. Then just about every college is going to offer what they call a direct loan. These are subsidized and unsubsidized. You may have heard this. I mean, gosh, the whole student loan thing has been going on for months and months. Don't ask me about that. I'm not going to go into it anymore. I'm tired of answering questions about it because it doesn't mean anything, because who knows what's going to happen ultimately. But there are subsidized loans. It's $3,500 for the first year, and if you get a subsidized loan, your student does, that interest is going to be subsidized by the government. They're going to pick up the tab on that, just like they have been for the past few years, but it's going to go beyond, like when they start college and the moratorium's over, they would still get that subsidy. The unsubsidized loan, which is for $2,000 per year, that's not a maximum based on how much you get for a subsidized, but that's no interest is covered there. And we call that self-help, and sometimes parents will just pay the interest as they go, as they collect those. And then there's federal work study, which really, it's a job on campus. It's federal and college money, 50-50, they're splitting it. But they offer more jobs than they have positions, because they figure, well, a lot of students aren't going to want them. But that means that when there's high demand, it means a student is not guaranteed to get an on-campus job. And that money is paid to them directly. Then after all of this has been applied to that need, then we have what's known as grants. institutional grants. This is money from the college themselves, and they can determine how much they want to give and how much need they'll meet, what percentage. And some schools will be more and some schools will be less. Now, as parents, helping their children go through college and probably paying a lion's share of the expenses, it's important to know that, first of all, right now with enrollments down so much, we're in a real state of craziness, flux, if you will. Colleges are quite concerned. And so this kind of puts parents in a unique position because the colleges are more apt to give more money now because they're buying students and they need you. They need you. They need customers. They need good customers, people who can pay the bill. And because you're a consumer of higher education, you have power. And because you don't have to go to that one school, you can go to another school. You don't need any one particular school. You just have to know how to exercise that power. Now, when it comes to the actual price that you'll pay, well, that's going to vary from student to student, family to family, college to college. It's kind of like airline tickets and hotel rooms and car rentals. It seems everybody pays a different price. You may be aware of this. They'll say, well, don't look at the sticker price. It's, look at the net price. Well, that's true, but net price is going to vary. And everybody's going to pay a different price. I've rarely looked at two financial aid awards from two students from the same school and seen the same amount of money. I don't think I've ever seen it. And what happens is, in terms of influencing the price, it's just like demand pricing. I mean, let's say it's Thanksgiving coming up and the airlines know that their demand's going to be high for their airline seats, so they raise the price, right? So it just makes sense. Colleges do the same thing. The more selective and more elite the colleges are, the more they can expect more people to pay. And to get a discount, and we'll talk about that, to pay less, you're going to find out that some schools will offer more money because they want your child more than other colleges that maybe don't really care if your child comes there or not. That's not a nice thing to think about, that some schools won't want your special child. Well, some colleges just won't care. That's just how the cookie crumbles on that. Okay, award packages are based on that EFC number I mentioned. It's also based on the student's unweighted GPA. Get a lot of controversy about this. Colleges will take whatever GPA they get, if it's a 4.5 or 4.7 or 4.3, they're going to use a special calculator that you can find, and we have it on our site, that will translate that into what the colleges are going to look like. They have to base everybody on a 4.0 scale. So if you have AP, your students have been taking AP or IB or honors classes, and it's up high, they're going to level it out. So if a kid got a 4.0 just taking regular courses, and your student got a 4.3 taking the higher courses, well, that 4.0 for that student who didn't take, that's going to be like a 3.6 or 3.5. So that's how that works. So don't take any undue concern about that. And then maybe test scores. Historically, test scores and GPA have been tied together in offering merit funds. Now, because of COVID and the SAT couldn't be given, a lot of colleges just said, let's just go optional. Some schools don't like the test. Now some of them are bringing them back. But it used to be based on a matrix, and it would just be a tier system. So if you had a 3.5 and you had a 1200 SAT, you got $16,000. That's it. That was the deal. And then, of course, every school has their own financial aid policies and their experience with their investments and their endowments and how much is available and so on and so forth. So just to give you a quick example, and I'm going to show you some real examples in a little bit, but this is just the math. And if you have a calculator handy, you can check it for me. The cost of attendance to this school, including everything, room and board, books, supplies, hair care, products, pizza, $60,000. So let's just call that all in, $60,000 at this school. And let's say the student receives, it's a good student for the school. They like the student enough to give $18,000 merit award. So now we have a new cost of attendance of $42,000. Now notice my EFC is not in there yet. but we're going to apply it right now because we've got a 42,000 EFC to fill, and what's the college going to do? Well, we're going to take our EFC of 20,000, which is approximately, all things being equal, about 102 to 105,000 adjusted gross income. Okay. And we're going to have a financial need of $22,000. So we take that need and we apply some aid, the first aid the college is going to go to. First thing, they're going to go to the state or the federal government to see if you qualify for any funds that they can give you there. Then they're going to throw the loans at you, which is, again, not their money. And the maximum is $5,500 first year. Now you have a remaining need after that of $16,500. So now let's see what the college is going to do to help out. As I said, the federal work study is split 50-50, so the school's really only kicking in $750, and the government's going to kick in $750. So that's paid directly to the student. And then there's this remaining need, and the college figures, well, we figure we can give this student $6,000 and leave that gap, the $9,000 remaining need, and add it to the EFC, and we're going to end up with a bottom line of the POOP score is $29,000. So that's what the college thinks. Now, you can maybe go back, depending on certain variables, and ask for more grant money. Certainly can do that, or affect your EFC to a lower if you appeal. So how do you go about finding these schools? Now, we had a question in the last session, and I thought it was kind of an odd question. They said, well, why would I, how can I not use you, and what sources would I go to find out all this great information? Well, I wrote down 6 specific places. It's not on a slide because I wrote it before, just as I was sitting down. But I'm going to tell you why that's, it's great to do that research, but it's also not just as simple as looking up some numbers. At any rate, so you want to find colleges with generous discounts, and how do you do that? Well, first of all, we're looking at private versus public schools, right? They're not the same. They're very different. Private has their own rules. Public are beholden to their state legislatures. But private schools compete for the same students going to the less expensive public schools, so they're willing to discount. And this is how, if you might have heard this, that a private college can cost a little more or around the same, in some cases maybe a little less, than a state school. And this is because private schools have their own way of doing things. It's their money. They're not using government money, they're not using state money. And they're not beholden to you as a taxpayer paying tax in that state. So a private school, you're in New York State, say you wanted to go Ohio, let's say Denison College, private school outside of Columbus. Well, they're going to look at you, okay, you're coming from New York, well, we're assuming you would apply to a SUNY campus. Well, we're going to offer money to compensate for that. But if your same student wanted to go to Penn State or Maryland, for example, you would end up paying 3 times their tuition, their in-state tuition rate, which can be quite a bit. I mean, you're looking at over $60,000 between the 2 schools, separately, of course. Out-of-state public schools are looking for you, as an out-of-state parent, to pay for their students because their legislatures aren't funding education any better than your state legislature is funding your state, although New York does a pretty good job, I must admit. So, just generically, any money you get from the school itself, whether it's a scholarship or a grant, that is a tuition discount. That's to attract students to come to their school. It's determined by a number of factors, not just EFC, but also by what the student brings to the party. What's their college capital? What are their grades? What are their EFC? What are their test scores? How do they compare with the student body that they took in last year, and how they're shaping up with the applications this year? And be aware that every college will offer a different package. I've seen similar students get dissimilar packages even though they're going to the same school. They could have the same EFC, but it can be different, and most likely will be different. So a long time ago, I needed what I called a down and dirty way to find my clients where the money was. Show me the money, right? And we developed this little tool called MeritMax, which took on a life of its own. It was just meant to be a quick search to see who's going to give the student money. Well, it's gotten a lot more sophisticated, and now it calculates the federal and institutional EFCs. Just so you know, okay, I mentioned the federal one, the EFC. That's student income and assets, parent income and assets, the number of students in college, plus some other factors. Institutional EFCs are a little different. They sometimes, in a lot of cases, count the equity in your home, businesses. They take into consideration other expenses, but typically you're going to see an institutional EFC higher than the federal one. And about 200 schools use this EFC. Now you're in New York State, so I'm just thinking Hamilton, Colgate, Smith, Skidmore, Cornell, and the list goes on, Hobart, Williams, all those private schools. And then, of course, all the New York City schools, basically, are going to use that higher number. Then, the discount comes in with the GPA, the unweighted GPA. The higher it is for that school, the better a candidate that student is. That definitely counts. And we want to put that in there, and we use to the 1,000th% to be able to determine where that student sits with that student body. Now, we have to go for last year's student body, but that's generally close enough. This isn't perfect, but it's a pretty good gauge of what your student's going to get. And then their personal preferences like majors, size, and location, as well as selectivity. So you might put, well, I want my student to be in the top 20% of any incoming class, because that's preferential. The student would likely to get a preferential package. If that college you're thinking about doesn't come on the list, it means they're not in the top 20%. Look elsewhere to see if you can get a better offer somewhere else. Maybe they're in the top 30%, and still take that back to the school. But it's really selectivity, location, and price that we're looking at to be able to see the discount and then go to another school and hopefully get them to sweeten the pot. So you crunch them all together and all that. And it really takes literally a couple minutes to do the whole thing. You get this. You get your tuition discount, and 50% is kind of the right in the middle, the mean, taking into consideration public and private. But 50% is okay. That's pretty okay. And then above that's good. And then we have another student who received a 97% tuition discount at their school, and then another one who received very little. As you can see, they're quite unhappy. Now, that doesn't mean they weren't awarded, and we do give a lot more data. Doesn't mean they didn't get some money, but it just means that compared to the other schools they're looking at, they're going to be paying a lot more out of pocket. That's all that means. Doesn't mean that the school didn't like them. Well, just didn't mean they loved them either. Okay. I'm going to go back 1 second about that, because I mentioned that somebody asked me in the last session, well, can't I get all that data myself? Okay, you can get it from Peterson's data. You can get it from the College Board. You can get it from College Scorecard, the National Center for Educational Statistics, the College Navigator, a federal site, as well as each college has their own common data sets that you can look up each one and go through. I think it's 38, 40 pages, and find what you're looking for. And then you can crunch all that and then see, okay, these are all averages, which is what you're going to find. But average means average. It doesn't mean a specific percentage, and it doesn't give you a specific dollar amount. So that's the reason why a lot of people like our MeritMax. That's why I use it for all my clients. And the people who license my software, there's a lot of professionals who, I didn't think anybody mentioned that. Yeah, I mean, my software's been around for a long time, and it's used by professional college consultants. Okay, let's get our FAFSA and financial aid process started. If you haven't done this already, you will. You will get yourself an FSA ID, and that takes, depends, a few minutes, depends how well the process goes, and depends how well the site is behaving at the time you log in. So you need to have, the student absolutely has to have one, and they also have to have at least one parent. If it's a two-parent household, I urge you both parents to get them. There's reasons for that. If one parent doesn't work for the IRS DRT, which is a data transfer from the IRS, you can try the other one, or if there's a mismatch or somebody gets locked out. There's a lot that can go wrong with this stuff. In fact, I'm getting a lot of complaints, nothing my software can handle because it's nothing we can do, but when people had gotten their FSA IDs prior to July 10th, there's a lot of problems going on, and well, if you've already experienced that, you know what I'm talking about. But I've been on a number of parent sites and professional sites, and what's going on out there with this particularly is bad in terms of getting a match, which means you can't file without it unless you print it out in paper and mail it, which I don't recommend you do, because then you can't go and add schools, make corrections easily. It's not something you want to do. But the FAFSA itself, I'll give you the window. In the East, it's about 7:30 to about 9:30, 10 o'clock in the morning. It works pretty well. And then for about a half hour around 3:30, and then later on in the evening. Mostly it just gets bogged down. Why? Well, you've got 3 sites in one. Number one, you've got the FAFSA itself, the financial aid FSA IDs that you need to get. They've combined the student loans together, and now you've got 40-some million people looking for student loan forgiveness, all on the site. So it's a government site, and it's harkens me back to the days of healthcare.gov and that website that was initiated when Obamacare went into law. So we're going to file the FAFSA, and then if we have one of those 200 schools, more competitive schools, you're going to file the profile. Now, this is a brand new profile this year. It's 18 sections, and I think it's about anywhere from 12 to 18, 17 questions per section. Actually, I got that wrong. 2 or 3 questions per section So it can go on 3 to 4 questions per page in a section, and it's about 12 pages per section. That's what I meant to say. I'm a little punchy, it's getting late. It's a very long form, and if you can avoid filling it out by not applying to those schools, you should try to avoid it. Because generally, it's just a real difficult form to fill out, and you're going to be asked a lot of questions you don't know how to answer. So what's the process? You're going to need tax returns. You're going to need the institutional forms the school has to fill out. You're going to provide all this. There's going to be verification forms. Now, federally, only 17% of students were selected for verification last year. That's down from 32%, which is great. But it's sort of like a mild IRS audit. So you'll have to get a tax transcript from the IRS through their website. And then you'll need to fill out what they call a dependent verification form for however many schools, because you're going to be selected for verification at all the schools your student applies to and is sent a FAFSA to. So you'll have all these forms. They pretty much look all alike, so I wouldn't be too concerned about one, just sort of copy one, but you'll need multiple copies of your tax returns. And some schools have as many as 6 forms. And I know when I say this, people are incredulous. They don't really believe me. But I'm going to give you an example right here. Okay, this is from our website. This is I just happened to do a test on somebody today filing their FAFSA. And it's cut off. There's a submitted date on the right, but you can't see that because I wanted to be able to see. So you have Caltech here. And we've got a FAFSA, a profile, IDOC, which is additional forms, and you send your taxes through this IDOC. In this case, we have a person, a parent who is unmarried now, separated, divorced, or was never married and not living together. And then they have an institutional form, their own supplemental form. And then the non-custodial parent will have to send their taxes into IDOC as well, and also some additional verifications. So that's just an example, and I didn't have to look very hard to find that. So there you go. Now, shortly after your student's accepted and to the college, and they get really excited, hallelujah, we got in, and we're moving forward now. Sometimes it can take a little while before the actual financial aid award letter makes it. It can take a couple of months. So don't get too excited. Give it some time. I mentioned Georgetown as an example for early action. You'll get admitted, but then you'll have to wait 3-4 months to find out how much money you got. And once you get all those awards, then you have to decipher all the offers, and I'll show you some of those, and we can show you a little bit about that. And then you can budget how you're going to pay for that, and also look and see what they're including in their offer in terms of costs. And then you're going to crunch those numbers and evaluate them. Some people just spreadsheet them. I think there's better ways to do that, so you can actually find out exactly how you stack up against the other schools. It's not always a dollar amount. You know, it might cost $5,000 to go to, let's say, Caltech, for example, versus Geneseo. You know, maybe that's worth it. I don't know, but it doesn't mean that it's a bad offer. Okay, our strategies, tactics. Find colleges that want your student. Do your research. Look outside your universe. Look at your assets. Increase your need if you can. Get more funding if at all possible. I'm not a company that takes a look at your assets and says, look, we got to remove them by putting them into things, you know, that cost you money. No, I don't do that. We don't do that. I used to do that decades ago. It never works out. Rarely ever works out, except for the person selling you stuff. I think students need to look beyond 2 hours from home. It's a great idea. You're in New York State. Okay. Colleges in Washington State or California or Colorado or New Mexico or anywhere else far away from home don't know that you're not serious about going there. They have no idea. What they can do is offer a pretty good package that you can use as leverage later on. Now, I've seen some geographic awards. For example, this is just a couple of years ago. I had a young lady from Irvine, California. That's in Southern California. She had some difficulty with her grades, and this is when the test scores were useful, and they still are. But she had had some emotional difficulties, let's just call it that, and her GPA went down more than she would have liked. But her test scores were solid 1420, that's SAT. And she applied to a college, Allegheny College in northwestern Pennsylvania. And she almost got a full ride. And the reason why was because she was from California, and they wanted kids from California. And by the way, I think Allegheny just announced if you earn less than $50,000 a year, tuition is free. Starts next year, and for all the students who are going there, it begins in 2023. They just announced that. And it's a very good school. It's one of the great liberal arts colleges in the country. It's not like Williams or something like that, you know, up in Massachusetts or some of these other schools which are ridiculously competitive. No, it's a great school that you'd find in Lauren Pope's colleges that change lives. So the idea, the more schools you apply to outside your universe, then you get these great offers. You're creating demand for your student. Now the colleges that you really want to go to don't know that, but they will. So one of the things most people do not do is read anymore. We don't read. I put up instructions for everything, and I even give videos on how to do stuff. People don't read, they don't even watch, they just want to have it happen. Well, you can't do that with this. This is just too big, okay? You can't play the game without knowing the rules. And part of the rules is knowing what the instructions are telling you and how to interpret those rules for your situation. And don't rush. You know, we're on the 11th, right? The 11th, I think it's the 11th. Filing the first couple of weeks is not important at all. Take your time, don't rush it, get organized, and then closer to November 1st, then you can start filing. That's when the situation has calmed down. You don't have millions of people getting on the site, causing site errors, timeouts, you having to go back in multiple times, and it's just not worth it. Take your time, look at the questions, understand them, and answer them properly. If you have assets that are liquid or you have property, can you justify a lower value? You absolutely want to do that. And sometimes you can just look at your tax returns because we're going back 2 years to 2021 and also think about, will I still have that money when my student starts college in August? For example, let's say you've got some money sitting in a cash, you know, checking account or money market that's going to be used for a very large purchase. Doesn't matter what it is. Let's say it's going to be used in the next 2 months, 3 months, or even for college. Well, why should you get penalized for that money when you're going to spend it on the very college who wants to know how much you have, who's going to penalize you for having that money? And then they're going to take it from you and then you're stuck with a bad package because your first one's really the one that you're going to have to live with. It doesn't make sense. Then you go and you file the forms. Now, the award letters come in, and you have to be able to evaluate them. As I said, some people spreadsheet them. That doesn't show the whole picture. It just shows you, what the bottom dollar, what the poop score is. That's not always entirely relevant. A great school that costs a few dollars more might just be worth it. Think about networking. Think about the kids who are going there. Are they as interested in learning as your student? Think about the culture. There's a lot to take in, and just a bottom line price doesn't always tell you everything. What you really want to have is some very good offers so you can get the best price you can at the school your student really wants to go to. So then you're going to, like I said, you're going to be comparing these with the other schools based on their capital, the student's college capital and their EFC. Now you're in a position when you have all that and you have the offers to negotiate. Now in America, we're not really great at negotiating. We don't go to Macy's and say, I'd like $20 off those shoes. That doesn't happen. So we're not, the only times you're ever in a position where you negotiate is like with a car, which is probably one of the more unsatisfying and distasteful things that you'll go through, other than buying a house where you usually have an agent helping you, right? So negotiation is kind of like, okay, he keeps talking about negotiation. Let's use a better word. Let's use a different word. It's not a better word, it's not as descriptive, but let's use like appeal. And I'll talk about that in a minute. But let's appeal for a better award, okay? So I want to show you a pretty good award. This is from DePaul University. And you can see there's some columns here highlighted in purple. And you can see the first one, which has a scholarship and a grant, $30,500. The loans are in there, the federal direct subsidized loans. You see them for the amounts I quoted. And then the billable costs, tuition fees, on-campus room and board, and then orientation. They charge your student, I don't get this. They charge you to show your kid around campus. You visited for free, why can't they? Anyway, so then you have the billable costs that you're going to get a bill for in July after what you see here. But that's not necessarily very good because they're not including those indirect costs. They're not including books and supplies, travel, personal expenses like food, pizza money, clothes, hair care products. I mean, all that. But we crunch the numbers and we end up with a 72% tuition discount, which is pretty good, not bad, but it's not so great when you look at this. The cost was $61,000. The EFC was under 4. The need was over $57,000. They got $36,000 in aid, including loans. The gap is over $21,000. Their EFC's 30. Then we got to add the EFC back to that gap, and now the poop score is $25,241. A family with a $3,800 EFC is making less than $50,000 a year. How are they supposed to afford that? Now here's a great award, and this is a young lady who was admitted to Smith College, and she got a great package, $64,800 in grants and scholarships, and she also received, the other stuff that you get, work study, and some other costs, they have to bill for. But basically, it boils down to this: the cost of this school is over $77,000, including the extras. The EFC was a little higher. This is a family that makes about $70,000, I think. EFC is $85,522. Financial need, $69,000. The aid offered was almost that. Left a gap of $252. The poop score is $8,804. Chances are, if this student didn't get good grades at just about any other school, she would pay much more than that, just about anywhere else. So the discount on this student was 100%. And obviously it's not going to happen for everyone, but the closer you can get to it, the better. So to negotiate, you're going to need multiple offers. You just can't go and just say, I want money. You got to be able to, if you need to prove it, you're going to have to send them a better offer. So you're going to have a strategy to do this. The student is going to be the one that takes the lead on this. You don't. Now, if you want to impersonate your student, you can go ahead and do that. That's up to you. No judgment. And the student will ask for help, not a specific dollar amount of money. Now here's, I was going to show you this particular offer here. I don't know if my mouse is going to click, but there's one here, College Bound Scholarship, $5,401. Now that's not a scholarship, that is actually a grant for that amount of money. And so is this Lohman Douglas one, because it's an odd amount. The actual scholarship is only 14. So these two are grant money based on need. Okay, this student did get a Pell Grant. So, but the tuition discount's 72%. But after the negotiation, you'll see that college bound at 5,401. Now it's 11,904. That was increased to that, so the discount went up from 72% to 84%, from 5,400 to 11,900. Apologies. Okay, so appealing for more aid. This is a little different. Let me check my time here. This is a little different from negotiation. There's about 21 different circumstances based on a hardship and terrible things that can happen to you and your family that you would want to let the college know about. Find out the procedure. You go to their website, give them a call, email. Is it a form? Is it a letter? What do you need? Typically, you're also going to file, either right before the student gets their award or right after, but you want to ask the school when they want that. How you would do it? Well, you send them a letter, also an email with an attachment, right, telling them what happened and what are you doing to do to sort of fix things, even if it's hopeless, let's say you're just in a bad spot, but what are you trying to do? Anything that shows that you're helping a little bit. That's the emotional side. What happened, they don't care really. They just, what are you doing to help yourself? That sort of adds, like, I'm not a victim. I'm, trying to be proactive here. And you provide just enough documentation to prove the financial loss or difference. That could be paying for care for elderly parents. It could be medical bills, any number of things. And it shouldn't be more than a page and a half, max. And always, always ask for help. Do not ask for a specific dollar amount. That's not how it works. They're like accountants in this sense. They have formulas they have to follow, and they're going to go off whatever documentation you send them. And the +1 is loans. I don't advocate going into debt, but student debt is about $27,000 for a 4-year degree. You need to know, there's questions you should ask yourself about if you want your student to have that debt. What kind of major are they getting into? Oftentimes they don't even know right now. What kind of career are they going to have? You may not know that. In fact, I guarantee you 9 times out of 10, you're not. But they have to make enough money to be able to pay that monthly payment of, say, it's $350, $360, as interest rates keep going up, maybe $375 a month for the next 10 years. Or longer, they can stretch it out. But that means more interest. And then there are advantageous ways to do this, and oftentimes parents can get a refund. There's some financial planning stuff you can do. I don't do that kind of work. I refer that out, because it's complicated, and I like simple. So you can do that. Now, you've been hearing an awful lot about loan forgiveness for the past 6 months, year. Well, it's also for parents. It's not well known, but it is. It affects both families, high income, medium, low income, doesn't matter. There's a loan loophole. It's not really loophole, but it's an easy way to put it, that gives the parents forgiveness in 20 years. So you could borrow $500,000, have a payment of $360 a month for 20 years, and that's it. I mean, literally, that can happen. And it actually does, if the circumstances are right. So literally, you could save a whole lot of money. And but you need to figure that stuff out sooner than later. So people ask me, like somebody said, well, why do I need you? Well, you don't need me, okay? Somebody said, hey, they sent me an email and said, well, I've talked to some other parents that the FAFSA is easy. Well, yeah, for some families, it is easy. For some families, it's not. Financial aid now is kind of like the TurboTax of financial aid, with a lot of support. And we will help you find colleges with high discounts. so you can apply to those schools, even if it's worth the application fee. It might be very well worth it. You can file the FAFSA to your advantage using our strategies, and be able to negotiate and appeal successfully. And that's it, you know. And then at the end, best options for financing. And you know, if you can do all this in a week or two, you should. Then you don't need us. In fact, not anybody needs anything. It's a more of a will this help, and is it worth it? So that's all I'm going to say about it. The tools we provide are EFC calculators, which allow you to see what your EFC is likely to be, as well as the institutional, the more expensive one for those 200 schools. And well, there's about 400 programs with 200 schools for undergraduates, and the federal numbers. And you can play what ifs by changing your numbers to see how it would look with 2 kids in college, or if you move some money around, or you just discounted or whatever, you can see. The Merit Max will give you the college discounts. That's very easy to use. The filing software is pretty quick to use. You click a button and it's done. Well, a couple of minutes anyway. And then you can take a look at the award evaluations. You enter them in the system, and it'll evaluate them for you and tell you what your best options are. So you can negotiate like I do. And it's basically copy and paste language, so anybody can do it, as long as you have it. And we're like your buddy. We're going to follow you through every step of the way. Now, if you hadn't entered schools in your program, we're going to let you know you haven't done that. We're going to text you once a week. We're going to email you once a week. Say, hey, you haven't done this. We're not going to call you up at home, but we're going to text you and say, hey, you didn't do this. Every step of the way, whatever you haven't done yet, in the time you need to do it, we're going to be there. So if you don't like to be, if you don't like a nudge, if you don't want somebody, you know, hocking you in a chinik, you know, then you don't want us. But you do get experienced aid professionals, and I'm the virtual professional who's built this over 26 years. And some people think I know something. So you get a lot of this help, privacy in your own home. You get the strategies to get more aid. You don't have to get frustrated and crazy through the minefield and pitfalls that can cost you a lot of money, especially when a lot of them can't be undone, a lot of mistakes that can't be undone. I don't have time to go through all of them, but there is a number of them. And then you have, through our site, a highly organized process and a place where it's called, if you were a chef in French it's called mise en place. Everything in its place, and everything is in place in one centralized location. That's your FSA IDs, that is your schools, that is the student IDs, everything that you need, the awards, the submit dates, when things are due, all of that. A couple things we don't do. We don't sell your information. That's why we have to charge money, because any free site you use, they're selling your information. Trust me. They're selling your AGI on scholarship sites. They're selling your email address. They're selling everything. I know because I checked it out, because I wanted to go free. Can't do it. I won't do this. I also won't sell investments or insurance for products you don't need. It'll cost you, because people make commissions on those. Not that they're not necessary in some remote situations, but for the most part, they're not necessary. And we don't sell loans. I don't make money on application fees. That's not how we do it. So we've done a couple things here. Our basic service is $149, okay? And what we did, because and it includes a free tuition fit account. I'm not going to go into describing, but it does give you some letters. It gives you some help with leverage. And what we decided to do, and that's our Plus program, which gives you access to office hours and some other specialties. We decided to make some changes here for the New York State PTA and just see what happens. See if people want to sign up or not. That's why we're doing it. So the Plus program is actually much more involved, and people come to our meetings every Wednesday. We have West Coast, East Coast. So this is what we've done. We've taken the Plus program and reduced it from $399 to $149. We've taken the, and there's the code for it. That's the actual link. You've probably been seeing it in your Q&A. Or your chat, I mean. And this is the code, 149PTA. That will get you in as a Plus subscriber. For the basic program, we're taking it from $149 to $99. So there's a $50 difference between having everything and this is totally do it yourself. I mean, we do give you the videos and things like that and instructions, and that's all great. But it's a little more basic. The office, the plus is with the office hours is much more involved. And it's the same link. The code is a little different. It's 99 PTA. And this is good through Tuesday of next week. So the Plus program, which has all the tools you need. And by the way, if you're a parent of a high school junior, you get next year free because you wouldn't be using everything. And that's how it works for as long as we've had this program. Anybody who signs up always gets, if they're graduating in 2024, high school, 2024, they would get the next year. Just automatically renewed. So there you have it. And do we have any questions?
We do have a couple that came in, Stuart. The first was, is the car considered an asset?
No. How's that?
Well,
that
was nice and easy.
Well, okay. Let me restate that. Some schools have that use the CSS profile have supplemental questions where they do ask, and a number of colleges ask various types of questions regarding the car. They would want to know the year you purchased it, how much you purchased it, was it whether it was a lease or not, who's driving the car, how many cars you have, what's the current value of the car. So, if you're putting on a Lexus or Mercedes, personally, I don't think it's anybody's business, but yeah, they do. Some schools do ask that. Yeah.
Okay, next question. Can you make changes to the FAFSA once you've submitted or filed it?
You can make some changes. You can add schools, of course. If you can only put in 10 at a time, and most kids we see are doing just over 10, 14, 15, 16. And once doing the other 32, which I thought it was, grotesque, really. Medical school is one thing, but undergrad now. But yeah, you can delete those. If you have more than 10, you delete the 10, you add the next 10 or however many. And that just creates another transaction. The kind of changes you're probably talking about is income changes. If you use the IRS DRT, which is highly recommended, because you're going to get basically selected for verification if you don't, you can't change that. That's a fait accompli. You can change your assets, but depending on how you change them, it could cause some questions because you already have the original answers in there, permanent. So it's a little, you can do it, but you have to be careful how you do it and be able to back it up. I had a student, the parent last year, who had an EFC of, 322,000, I think it was. It was crazy. But he put down stuff in business and farms. All this stuff he put down. So we got it down to $600. But he'd already submitted to 10 schools, that original one. We were able to get 5 of them to accept the changes. The other 5 said, no, sorry. So you just have to have enough schools in there to, because for some it's going to work and for some it's not.
That's great info, Stuart. Next question. If you rolled over a Vanguard IRA into another company's fund, is that considered an asset?
No. Okay, there's 2 formulas, the federal and the institutional. Any retirement funds you have, for the College Board's profile, they're going to ask you about your retirement funds. They're going to ask you a number of questions. Are you planning on getting Social Security? Do you have a union pension? Do you have 401k and IRA? They're going to ask state, civil, military, whatever. And then they're going to ask you the value of all that. Now, personally, I use a little formula to that to bring down the value, so that, I don't know if answering 0 you can get away with. I've never done that. I always put something down because, if you're making $150,000 a year, it's inconceivable to me you would have no retirement at all. So I always put something down, but I put a formula to it to reduce its value. Now that technically, it's only going to show the financial strength of the family. It's not necessarily going to impact the actual EFC, for them, that'll be an individual school choice depending on how much weight they give it. What was the other part of the question? I'm sorry, I kind of went off on that.
And if that Vanguard or something else rolls.
Oh, yeah, yeah.
income
Okay.
at an app-
Yeah, right. But what I was going to get to is one of the key mistakes that you don't want to make. I mean, because if you did a rollover in 2021, all right, and it happened early in the year, for example, and you aren't aware of it, you forgot it, and you look at your 2021 return and your accountant or you or your CPA didn't include on line 4 or 5A rollover because they're going to show an untaxed amount, or maybe they don't even put it in there, and then you use the IRS DRT, guess what's going to happen? They're going to pull all that untaxed income, which is the worst kind of income you can have when it comes to the formulas. You're going to pull it. You're never going to even know it. You won't see it. Okay? You won't even see it. And your EFC could go from 40,000 to 100 and a million, just because of, depending on the size of the rollover. Million's probably not going to happen, but I've seen it go several hundreds of thousands of dollars. Now, the problem with that is you can't call up, you can't make the change because it happened through the IRS DRT, so you can't change that. You can't get on the phone and call 1-800-4FED-AID. The student aid people can't help you. You got to go to each school and give them your 1099-R for that transaction with a letter from either yourself and an accountant, some proof that this was a rollover and not. So you got to go to every single school. To me, this is the worst
I was
mistake.
gonna say, that sounds like a real big pain. Whew.
That's why you want to make sure, if you even vaguely remember having any kind of retirement planning done, find out if in fact you had a rollover and make sure that it is on your return, so that and if you're using our system, you notate that and it takes care of it. So you have to do it on your own, but if you don't know to do it, then it's a lot of work. Let me tell you, it's one of the worst mistakes because you can't do it globally. It's got to be individual.
Okay, next question. Is an HSA considered in FAFSA application?
Actually, yes and no. Depends on what it is. If it's employer contributed, no. If it's coming out of yours, yeah. The balance isn't, just the contribution.
Okay, great info. Hold on, another question coming in. Do you also help assist with this?
Let me interrupt.
Okay.
I just redesigned those answers on our website in the tooltips. So I'm like this. I had the hardest time with the HSA of all the things. This is the hardest thing. I think I'm right what I just said because College Board treats it another way. So that's where it gets a little confusing. So I would take what I just said with a grain of salt. Don't be surprised if I'm wrong. You can look it up on FAFSA, but
That's good, but they can look it up on the website, so that's positive.
Yeah.
Do you also help assist with the CSS applications if needed for that fee, or is that more?
No, that's included.
Oh, great.
That form gets done. They've redesigned the profile, so it's going to be another week to 10 days before that's done. It's been completely redone, and like I said, it's got 18 sections and 12, 15 pages per section, and each page has 2 or 3 questions, and it's I would hate to be my programmer right now. But it'll be done before November 1st, which is when the first deadlines are. And I want to mention November 1st is a deadline. It's not real. Those are typically early action, early decision deadlines, which are not hard and fast. Just so if you miss it for whatever reason, don't panic, okay? The only reason those exist is so that if your student is admitted, early decision, but like December 15th, that they would get a package close to that time. So if you're a week later, it just means they would get a package a few days later. I remember when my daughter applied to Wellesley, early decision, and we didn't get it until 10 after 12, right? And I was so freaked because this was her dream school. And I called the school, and you know what they said? They just went, "Oh, no problem." The better schools don't care. You can apply to financial aid to Harvard and Duke and all the schools the day before your student gets to campus. Doesn't matter. Their deadlines, they just have them so they they match up with when you get the award or get the admission letter. Go figure.
Oh, that's great info. Next question. Would you assist with looking for possible financial aid awards? We would give you our information and would you plug it in? Question.
Would I do that personally?
I think that's the question.
Only if you were my personal client.
Okay, so I guess that is an option then.
Yeah. You can, but I'm not quite as expensive as everybody that in the East, but you know, that's why I built this so that I don't have to. I can get more people to do this.
Yeah, no, that's great information. Next question, should SEP IRA be included as an asset?
Oh, SEPs? No. Well, on the profile, yeah, that would be included as part of an IRA. Yeah, I mean, it's a simplified employee pension, right? That's what that is, SEP. Yeah. So, yeah, that would be counted.
Okay.
Retirement asset.
Great info.
Or a contribution to it, that gets counted. So if you got 22,000 going in your 401k or whatever the limit is for your IRA, that counts. That gets added back into income. Now, I'll tell you something else that gets added back into income. If you have any depreciation on a schedule, let's say it's a Schedule E, okay, they're going to take that depreciation, the schools that look at your tax returns, and they're going to add it back as income because it's only a tax loss. It's not a real loss. It's paper, not real. So be aware of that.
Yeah, that's great info. How about New York State 529 accounts? Are they considered an asset?
Of the parent, yeah.
Of the parent. Okay, great. Here's the next question. I am married and we file taxes separately. He is the stepdad. He does not contribute much to the bills and such. How does his income count for federal or state loans?
Okay, when you said they file separately, I'm assuming you mean they file completely different households. Like she's filing head of household, he's filing single, for example, not they're filing married, filing separately.
It says they're married and they file separately.
Oh, okay. Well, then you said okay, so.
But he is a stepdad,
Okay,
so I'm
I get
thinking
it.
that, but you know, like my situation with our stepson, I was stepmom to Zach, but Doug and my income both contributed.
Right, got it. Well, on the FAFSA, you have to take both W-2s and they're going to be separate, right? They're going to add them together. They're going to be separate lines anyway. You take what other income, adjusted gross income, for example, that gets put together, you know, line 11 for both tax returns. You're going to combine any retirement contributions, those will be combined. Whatever tax you pay, it's line 22, by the way, you would add those together and put it, so you would basically be adding it all together like you're filing your tax return together, but you're not going to be able to use the IRS DRT tool because they can't do that. I mean, it doesn't work. So you would combine all that together, and then of course all the assets would be put together. And I'm sorry, Mr. Stepdad, you are on the hook. You can appeal it, but you're not going to tend to not to be too successful unless you're like married that month. You know, you just got into yourself too deep. You don't even know what the heck happened to you, and all of a sudden they want half your money.
Yeah, and our family went through this. So I'm stepmom.
Lost you. Hello? 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 Can you hear me? I lost you. Okay. Well, let's see if I could somebody raise their hand if they can hear me?
I can hear you.
Okay, so I'm going to assume that Jen Murph raised her hand. Okay, so let me look and see until she gets back. Okay, I think I see. Already completed both the FAFSA and profile, haven't yet submitted them. Can you still help and review it, or is it worth it if we purchase the plat? Okay, there's no reason to file today or next week or in 2 weeks. There really isn't. There's not one good reason that I can think of. The thing is, when you become a Plus member, you're still going to have to enter that data into our system if you want to be able to manipulate it. And if you need help with it, because we do help people. Say, hey, look, I'm having trouble with this. I don't understand that. You know, you just email us and we'll tell you. But you would have to re-enter that. And then you could file again from there. If you haven't submitted it, just repopulate it. So, but it's not just, but you would also hopefully be able to look at some other schools you might be able to throw in the mix that would help, you know, get you some more money in the spring. And also evaluate the awards. The system would be able to do that for you. Because we capture the EFC, you can calculate the EFC from the College Board. I mean, this is not just about filing forms. It's about managing the process effectively and, you know, and being totally organized with it. That's what it's more about. Okay, the forms are just sort of a plus. Are parent-child assets weighed the same? No, they're not. Parent assets are counted just under 6%. Student assets are anywhere between 20 and 25%, depending on the formula. And yeah, so where would you put depreciation on investment property? Well, you don't put it on the FAFSA. It's going to go on your tax return that gets sent to many of the schools that use the CSS profile. So you don't have to worry about that if it's just a FAFSA school. I think I said that. I hope I said. For now, should we set up our FSA ID for parents who are ready to go when we hire you, or should we wait? No, just wait, because the thing will just take care of it. You want to set up some global settings. It'll take you like 1 minute to do all of them, you know. So it'll be better. If you want to sign up, then you'll do it. Still can't hear you.
I said, don't you love technology? We just lost internet service for a minute.
Oh, okay, there you are. I've been carrying the ball.
Oh, perfect. Perfect. Now, you know what? And I lost the chat. So because when we lost internet, so I don't know what questions we didn't get to. So if we didn't get to your question, if you could put it back in that chat, that would be great.
Well, actually, I have the questions up.
Perfect.
So I just kept
You're going to have to take them from here, Stuart.
Right. Okay. Well, I think I answered all the questions.
You are the best.
So I think that's everything. There was only about 3 or 4 more after
Oh, great.
that. And yeah. So unless there's any more, I think, you know, we've done, gosh, what time is it? Oh my gosh, we went 10 minutes over. Wow.
But it was a really great conversation. I'm just putting that information again in the chat. And just so you know, everybody is going to get this via email tomorrow with the codes too. So I think that will be helpful for people.
I'm very happy to say Stacy said, thank you very much. This was very
helpful.
It
was some fantastic comments coming in, which is really
Hannah said, thank you. This was very helpful. Wow, this is very good. I mean, it's nice to hear somebody say something nice. Great, thanks. You know, I mean, because I don't know, I just do these things and hopefully people get something out of it. The only way I know is if people sign up, they, you know what, we need your help, thank you. And we try to lower this so everybody can take advantage of it. And so far, the past few years have gone pretty well since we've decided to do this online, this TurboTax version of.
Yeah, and we really appreciate you working with us, Stuart. And I have to say, this is the first time we've seen, I mean, this is a massive discount. We're talking about less than half. So
oh, yeah,
I just really want to.
Yeah, this is it. This is we're not doing unless everybody buys, you know, which I doubt will.
Yeah,
you know,
yeah,
we'll
really appreciate it. So we're going to send this out to everybody tomorrow, but we don't want to take up too much of your all time and have a wonderful your evening.
No, I'm good. I'm good. I will. Let's see what time is it. My wife, I think I'll get her before she goes to tap dance class.
Oh, good. Okay. Good night, everybody. Expect an email from us tomorrow.
Take care of your. Oh, yeah.